Hello everyone and welcome to my morning report, chart proposals on Friday the 26th of August with me, Rich Pro-Market Analyst at Handset Markets. We've got a market that's basically treading water in front of Janet Yellen's speech today. She's got this big speech at Jackson Hole whereby the markets are sort of expecting her to lay out some sort of path of monetary policy in the coming months. Exactly sort of pointing towards an explicit rate hike in September is, I think, pretty much unlikely given Yellen's sort of tendency to sit more on the fence, and I think we're going to see more of a sort of a long-term view on monetary policy today, but still the markets are sort of waiting in anticipation of what she comes out with. We've got the Treasury yields. Oh, actually, that's the yield spread continues to fall. 2 years and twos versus tens yield spread continues to fall. But you've got the 2-year yield that has been pushing higher throughout this week, actually, in front of that, in front of the Janet Yellen speech. 10-year not so much. So that would suggest that the market's sort of being a little bit more hawkish in terms of monetary policy expectation, but still not enough really to suggest we're going to get an imminent rate hike. The December expectations for Fed funds futures is around about 50% still, so it's still in the balance really. But what we have seen is a bit of a choppy dollar in the last couple of days. You had a decent rally in sort of earlier on in the week, but that sort of just drifted off in the last sort of day or so, and that is being reflected across the forex majors today. Now, in front of Janet Yellen's speech, we have actually got a couple of interesting data points. We've got the Q2 GDP revision for both UK and US. Now you can see here the UK revision is expected to be 0.6%, which is actually in line with the last month. The first reading, I should say. Now this was the annoyingly Reuters shows the charts in a different way. This is the Q1 revision of 0.4%, so not actually all that useful. But Q2 first reading was 0.6% for the UK, so in line with that. And 1:30 you've got the US revision, which is expected to be 1.1%, so mildly lower from the first reading of 1.2%. And again, Reuters doesn't provide the actual, because that's the way they do it. Anyway, so 1.2% was the first reading, 1.1% is the expectation there for the annualized US GDP. So those two data points in front of Janet Yellen at 3 o'clock today. Now, my chart today is silver. Now, we've seen a corrective move on silver. I sort of initially showed you this chart yesterday on talking about gold, where gold broke below 1330, silver broke below 1920, which completed a small top pattern. And you sort of measure it down from the reaction high at 2080, so it gives you around about 160 ticks of downside, which is around about 1760. So there is still room for manoeuvre in this corrective move. But I'm going to say that we're now coming back to some key levels. You see these breakout levels. May 2016, the breakout was 18 figure, and 1770 was the sort of May 2015 high. So basically between sort of 1780 and $18, you've got a decent line of support. 1850 is also a key level going all the way back. It actually acts as a pivot line. Again, acts as a pivot line. 1850. So you're actually trading around there now, and you've just started to find a bit of support. Also, this 89-day moving average, once, twice, 3 times finding support in February, April, and June. Is this going to be another time that it finds support there? 1832 at the moment. So there is still scope for a corrective move within this uptrend. That uptrend currently comes in around about 1690, so there is a little bit more room for that move. But you're now getting these momentum indicators back to levels at which sort of the medium-term buying opportunities have been coming in. MACD lines around neutral. Also, the stochastics have started to turn up today with this little bit of a rebound. So is it that the buyers are already beginning to come back in? So you need to be mindful of that. And I think obviously in front of Janet Yellen, we had that candle yesterday, which was sort of a very uncertain candle, i.e. a doji. Didn't really give you any real direction, but mildly supported today with the weaker dollar. But very interesting that I think Janet Yellen will provide a bit of direction for this. It might give you a little bit of I mean, any sort of hawkish lean from Yellen would pull silver price lower. You got that initial support band $17.80 to $18, but also the uptrend support $16.90 coming in. So I'm still of the opinion that buying into near to medium term weakness is the way to play this, as I think it is pushing higher on the longer term now. So that's my outlook for silver today, and I wish you good luck in your trading, and I'll speak to you later. Thank you.